Venezuela's economic collapse teaches us 5 important finance lessons. This isn't just politics, this is real-world finance that affects millions of lives. Today we'll learn what happens when money loses value, why the dollar is powerful, and how countries can fail financially. Let's begin. Lesson number 1. Hyperinflation, when money loses its value. Imagine prices doubling every few weeks. That's hyperinflation. Venezuela's inflation reached over 130,000% in 2018. Some estimates say it crossed 1 million%. What caused this? The government needed money but had no income from oil. So they printed more and more money. But printing money without producing goods makes money worthless. Result: a cup of coffee that costs 100 bolivars in the morning might cost 150 by evening. People's salaries became useless before they could buy anything. Families lost their life savings overnight. The lesson is simple. Money must be backed by real production. Print too much money without making goods and your currency crashes. This is why every country watches inflation carefully. Venezuela shows us what happens when this goes completely wrong. Lesson number 2. Why the dollar is so powerful? Why did US sanctions hurt Venezuela so badly? Because about 58 to 60% of the world's money reserves are in dollars. Most international business happens in dollars. When America blocked Venezuela from using dollars, Venezuela couldn't buy or sell easily with other countries. No international banking, no easy imports, no easy exports. This is called reserve currency power. The dollar is the world's main currency. If you control the main currency, you control global trade. That's real financial power. This is why China wants its yuan to become more important globally. This is why some countries want alternatives to the dollar. When one currency dominates, that country has enormous power over everyone else. Lesson number 3. Don't put all your eggs in one basket. Venezuela made a huge mistake. About 95% of their export money came from oil only. When oil prices fell and sanctions hit oil, the entire economy collapsed. Venezuela's economy shrank by 75 to 80%. Think about this. If you depend on only one thing and that one thing fails, everything fails. That's what happened to Venezuela. Compare this to the countries like Norway. Norway also has lots of oil, but they saved money and built many different industries. When oil prices fall, other businesses help the economy survive. The finance lesson? Diversification matters. Don't depend on just one source of income. This applies to countries, companies, and your personal investments too. Spread your risk. Have backup plans. Lesson number 4. Even governments can't pay their debts. Venezuela borrowed over $60 billion. When they couldn't access international markets anymore, they couldn't pay back this money. This is called sovereign debt default. Many people think government bonds are always safe. Venezuela proves that's wrong. Countries can and do fail to pay their debts. Investors who bought Venezuelan bonds lost billions. The lesson? International investing has real risks. Political problems can destroy your investment overnight. This is called geopolitical risk. When you invest in foreign countries, you must understand their politics and stability. This is why bonds from risky countries pay higher interest. Higher risk means higher potential return, but it also means higher chance of losing everything. Lesson number 5. Controlling payment system is power. Venezuela lost access to SWIFT. SWIFT is a system that helps banks send money internationally. Without SWIFT, Venezuela couldn't easily send or receive international payments. This forced Venezuela to find expensive workarounds. Secret oil tankers, trading with gold using cryptocurrency. All complicated and expensive. The big lesson? Payment infrastructure is invisible power. The systems that move money around the world are controlled by someone. Control the payment systems, control the money flow. This is why America can use the dollars as a weapon. This is why China is building its own payment systems to avoid SWIFT. Financial infrastructure might be invisible, but it's incredibly powerful. Venezuela's story teaches us that finance isn't just numbers. It's about power, survival, and how the world really works. If you learned something new, like this video and subscribe. Thank you.